right, well, let's talk about the markets in some more detail. Karthik Kumar is fund manager at Axis Mutual Fund. He's with us. Karthik, great to have you with us here in the program. Good morning. Thank you for your time. How are things set up, Karthik? I mean, just in terms of the price action, momentum, or the lack of it for the last few days now. What have you been doing, and your thoughts on the market structure itself?
Okay. So actually, if you look at it over the last 6 months, essentially the markets have done fairly well, considering that we've had geopolitical tensions and economic tensions because of tariffs. And in that context, what we saw was market taking umbrage under value as a style, and value did quite well over the last 6 months, whereas traditional momentum growth, these styles kind of took a backseat. However, over the last 2 months, what we've seen is a much more risk-embracing style where high volatility, high beta stocks have done well. Momentum has been the better performer over the last couple of months. And we've also seen that in terms of cap space, where while over the 6 months, small caps and mid caps have lagged, over the last 2 months, we've seen sort of a comeback from by small caps and mid caps compared to large caps. So I think there has been a bit more risk appetite that we've seen over the last couple of months. And that was because of certain policy certainty, that was because of a pro-growth stance both by the central government and by the Reserve Bank in terms of taking proactive steps. And all those things, I think, kind of helped the risk appetite over the last couple of months.
Okay. All right, got that. Thanks for joining in, Karthik. Good to have you on. So investors are really wondering what next, because now we're within striking distance of the all-time highs. And, one is looking for further ammunition. So which are the sectors where you think growth could come through? Because there is no better fuel for a bull market than actual earnings growth. What are you most optimistic on?
So I think the growth sentiment across industries and across sectors should improve going forward for a couple of reasons. First, in terms of we've got a favorable base where last year was elections, so the activity was on the muted side. Plus, we've got actions by RBI that essentially have ensured that interest rates are lower, liquidity is higher, plus the tax relief that kind of kicks in. That's from a macroeconomic standpoint. And also, if you look at it purely from an earnings standpoint, we front-loaded a lot of the earnings cuts for FY26 over the last 3 months. And which is why I think going forward, and the extent of earnings cuts have been intensity of earning cuts have been quite significant over the last 3 months. And I don't expect that to persist. So I expect earnings environment to progressively improve over the subsequent quarters, and which I think will prompt the market to kind of look at good return opportunities in the near term.
All right. Where do you stand on the entire consumption, space conversation here, Karthik? Are you betting the discretionaries which are likely to outperform when the stocks are highly valued, or are you looking at some recovery in the staples where the stocks have seen a lot of time correction and maybe things are improving for the better? Where do you stand on that?
So we still like specific themes within consumer discretionary, especially with related to hospitality, travel, tourism. But in terms of traditional FMCG, we are yet to see an uptick in the underlying data. The earnings previews that have come in so far kind of reiterate that point, where we've still not seen an uptick both in the rural and the urban side. Commentary is getting better depending on which company you're speaking to, but largely we are yet to see it in terms of earnings upgrades as well. So for now, we'll still stick to our conventional themes, but at some point, the traditional consumers will also become attractive once we see an uptick in earnings estimates.
Yeah, no, absolutely. Makes sense. We were just having this discussion with Digant earlier and he said, NBFCs is one area which is perhaps a space in financials which offers opportunity. I mean, would you kind of agree with that, Karthik? I mean, and what kind of positions do you have? What segments really, broadly?
We are positive on financials, partly because of the fact that we are still seeing a mid-cycle kind of valuations there, and the fundamentals for the sector are turning positive for the reasons I already elaborated on. And within financials, we like both the private banking space, and we like NBFCs. We like both categories. So we have, say, a reasonable exposure across that spectrum.
Okay. Karthik, on the manufacturing side, manufacturing, Make in India, because there's such huge shift going on, right, between the whole realignment of global supply chains as well. Specifically, are there any verticals that you would be optimistic on?
We remain, while the whole policy action in the West and the ramifications still need to be watched out, but we need to watch out for. But in the near term, we remain positive on power, T&D. Those are the areas that we are kind of bullish on.
Okay, power and
space.
Power and T&D. Okay, utilities part of that category?
Somewhat, but more T&D place, I would say.
And valuations are comfortable?
Valuations are reasonable. I would say market, we all know our market itself valuation is at the higher end of the spectrum. So, which is why I would argue over the next 3-4 months till we see an uptick in earnings, the market is likely to be range bound. So I think that applies across sectors as well, largely.
In the auto space, is there something that you like? Are you looking to play this? Because, the per capita auto is still the lowest in the country from a macro standpoint. But a micro standpoint, the largest player has been losing market share because SUVs and, bigger cars are seeing more sales than entry-level cars. Then you have the two-wheelers, then there are the auto ancillaries, then there is the one which is exposed to global markets. So there is uncertainty there. How do you play this?
So with autos, we've kind of trimmed our exposure through time. We have selective exposure to autos through some that have exposure to the segments that you talked about, which are largely the beneficiaries within the four-wheeler space. So we do have selective exposures both in the four-wheeler and two-wheeler space within autos. But overall, we've trimmed our exposure through time because if you look at the sales trends, if you look at earnings trends, expectation trends, all have moderated, and valuations have kind of are full as well. So we've kind of trimmed that exposure and are more selective about it in that space.
Okay. All right, Karthik, good conversation this morning. Thank you very much for joining in and giving us your perspective on the market.